All right, 30 minutes left, 27, a little less than that, 26.40 to be precise. KG, do you think we can hold on for 26 minutes and 40 seconds?
I hope so. I mean, if we could, close the market right now, I wish we could here. But we have been range bound here for, let's say the last 2 hours or so, 2.5 hours at this pretty critical area. We kind of talked about it this morning, the 5630 level. That has been an area of resistance for us on Tuesday and Wednesday. And we're trying to break higher here, Oliver. Just not enough steam in order to do so for right now. But overall, the day is actually looking pretty decent. If we have the last 2 days, today and yesterday, you're making higher lows. That's something to be very confident of. We are seeing a little bit of a consolidation. Maybe get some buyers to really try to step in here and try to break out higher. I have 56.40 as your positive level for this the close here. That actually matches what we saw for this morning. There is some flows at 56.50 and 56.55s that I did see about an hour ago. So if we do kind of break above this level, that would be kind of our squeeze area for us to be able to hit. So another 25 points, give or take, to the upside here. If we break down, first area you want to be able to hold is 56.10, and then you do not want to go below 5600. That would be putting us at risk of a little bit of a round trip here. So overall, it's actually looking good. Market breadth is also looking good as well. So there's a bunch of different factors that are kind of taking place. The biggest thing is, do you de-risk going into the weekend, or do we see this kind of melt up type of rally? We'll just see with the price action and the flows right now.
Well, one step at a time. As we were talking this morning about potential, if nothing got in the way of this, and sentiment could have, but it didn't. I think that was a resilient sign for the market. Bonds didn't freak out. Macro traders kept a cool head. Dollar hung out and stocks prevailed. So when we were talking about those levels, I mean, we basically went to that first stop we talked about. So now it's a question, obviously, I mean, this is kind of saying the most obvious thing, but now it's a question of if a bounce turns into a rally, because these are levels you laid out for us. And I mean, we totally bounced within this range. So this is, so far pretty contained.
Yeah, it is. So we have the morning levels here. So this is kind of a big deal what we're approaching, and unfortunately I lost the dates, but I'll give you the approximate dates here. That blue line is that 20 period or 200 period moving average on the 15-minute chart. Very key chart to be focusing on, especially on the intraday basis. So if we kind of go back and you look at the first time that we actually failed this particular SMA was around February, early February, mid-February, the initial flush to the downside, that we were only about 0.9% from all-time highs here. A couple of days later, we came back and retested it, and then unfortunately we failed, and that failure caused another 7% move to the downside here. So why is this a big level here? If we actually are able to break through this blue line that we have on this chart and actually sustain and close above it, and maybe maintain it above it for another day or 2 days, that does kind of signify maybe a potential trend change right now. I don't think we can clarify or certify this as a dead cat bounce or not, or bear market rally or what have you, but that's going to be our first area. So that's another reason why we're kind of seeing this resistance. It's not only because of positioning for options, it's also because of the technicals itself. So very key level here. We're able to melt above it.
Kind of a big deal.
I mean, that does kind of open up maybe some possibilities for next week.
Yeah, all right, like that, like the cool-headed analysis there. We pushed to the highs of the week. We got within, a sliver, basically did touch the 200-day moving, got into the heavy volume area, the options area. I mean, this was kind of the place it looked like to reset. And now we find out if it's going to be a platform for anything. So with that in mind, what's top of your list? You got a bunch of charts, but we only got 3 minutes. So take me through kind of your top 2 here to watch next week.
Yeah, so for next week, let's look at the open interest chart. We did reclaim that channel for now if we close at these levels, which is good. 5630, once again, an area of resistance. Let's just say that we're kind of pinning or consolidating here, maybe trying to push higher. You are seeing vol kind of going down. You have RSI actually breaking above that oversold level. That's your first initial indicator that maybe some buying activity or follow through can actually happen. Early on this week, we talked about what happens with the NASDAQ 100 when we actually do see that hinge. It's doing the same same exact thing. Usually the next day is a follow through day. So let's see if Monday is going to be a green day for us for the most part. And then we're going to be looking at the 200-day moving average, 57.40. What I get concerned about, Oliver, is we go back up, touch the 200-day moving average, and then fail and go lower. That is something that we do see in these type of cycles. But for today, one more chart as you kind of talked about. Market breadth, unfortunately, I'm saying this. I'm just ruining it, right? Market breadth today actually was the best that we've seen since January 15th. Obviously, that's kind of changing right now.
How are you measuring that?
Just looking at the dollar sign ADD, so advanced minus the declining stocks for the NYSE. If you kind of go back and look at the daily chart, we were at the highest level that we've seen since January 15th, which was a really good power day. It was actually a gap up day, so that looked pretty good. Unfortunately, we're kind of losing that momentum right now going into the close. This is a today chart, 1 minute chart, so kind of watching this going into the close. And then volume is going to be the biggest question mark for me. If you're kind of looking at the E-mini S&P 500, volume is actually very elevated. That's not surprising. We do have a roll that's taking place right now, and the June contract is going to be front of mind. If you're looking at the SPY.
Oh, that was one of our tells too. That was a good call yesterday. Your eyes on the volume decreasing. We did talk about that. That resonated with me quite strongly as a good counter signal to the bears.
Yeah, definitely. So if you're kind of looking at it for the SPY, volume looks pretty decent. Hopefully it does eclipse what we've seen throughout the whole downturn. That gives you that first indication that new buyers are kind of stepping in. But if you're looking at the composite volume across all of the 500 stocks in the S&P 500, still a little bit light today, especially for a Friday. Now, we still have 20 minutes left to go in the close. Market on close orders can obviously jump that a little bit higher here, but SPY looks good. Maybe some of the Mag 7 volume looks good. But unfortunately, the composite, I would have expected it to be a little bit stronger. You want to see it actually eclipse yesterday's volume candle. That's not happening right now, but anything can happen here over the next 20 minutes.
Okay. Yeah, we are not done yet, especially considering how things went this couple past weeks. Let's see if we can just finish strong. Thank you, Mr. Kevin Green. Good analysis this week. Nice sleuthing yesterday.